Hello everyone, this is Riya Singh, the Senior Research Currency Analyst for Nirmal Bank. Now let's look at the happenings of the Forex market. Now we did see dollar index accelerating around 105 levels on the back of higher inflation, supply bottlenecks, higher energy prices, and of course the the bottlenecks into the supply chain and so forth. Now, after there were a lot of speculation around the rate hikes with respect to the Fed pertaining whether it would be 50 bips or 75 bips. But once the Fed came out with the rate hike, all the speculative momentum that was there in the dollar index discounted, and now it's resting within the levels of 102 to 101.60. Of course, going forward, what will be the outlook on the dollar index? Now, we must take into consideration that, of course, the inflation is quite high into the US, whether the inflation factor will come down or not. If you look at the micro data of the US, the consumer spending has been gone quite high. The saving deposits in the US economy is at the lowest from pertaining to the 12 years. So it is at the lowest that was seen 12 years before at 4%. Secondly, if you look at the credit card spending, it is at the highest right now. So the question of whether the inflation will come down or not certainly answers that it will remain at the elevated levels at least in the coming 3 to 4 months. Now what the Fed is banking on to control the inflation is of course the rate hikes, the contraction into the asset, and of course the thirdly what they are banking on is that a lot of the companies have started to pass over the high prices towards the consumer end, which is resulting into the fall in the number of sales. So taking a wider outlook on that, Fed is banking on it that the inflation will eventually come down, but that still remains to be seen. Going forward, I think inflation will remain and it will stick at the elevated levels. Of course, the levels that in the dollar index we have seen at 105 and so on is right now looks somewhat unattainable, because of course if you look at the other countries, whether it's UK or Euro, now UK has gone forward with 4 rate hikes, but of course the inflation is still not under control and they'll again go forward with the further tightening of the liquidity there. Zone, so ECB is right now talking of rate hikes and of course going towards the positive rates, which they have not done in the past 8 years. So once the ECB comes out with its rate hikes, and like it has said, it will go forward with the rate hikes after the June monetary policy, whether it will go forward with 25 bips or whether it will go forward with 75 bips, that still remains debatable. But of course, ECB coming out and talking about liquidity tightening is a very big indication. Now what banks this estimate is the inflation rate. So Eurozone has been struggling with a very high inflation. If you look at the current May data itself, Germany has seen its inflation going beyond 8.5%. Spain has seen its inflation going beyond 8%. So overall, the estimation for the Eurozone is that it will surpass the level of 8%, 8 to 8.2% in the month of May. So the prominent or the probability of the ECB going with the rate hike remains high. So once that happens, Euro will strengthen quite a bit against the dollar, and we could see some effect coming into the dollar index itself. Now talking about the Japanese yen, there is a lot of liquidity influx that has happened there. If you look at the Bank of Japan, they have been doing a lot of bond buying at 0.25 bips ka fixed rate. So a lot of liquidity has been influx there. The inflation in the Japan is above 2.5%, which is quite bearable for the Japan, because of course like other countries it is not seeing a very accelerated inflation right now. So Japan will remain accommodative. As far as taking all these factors into the dollar index, I think it will remain in the range of 102.25 to 101 levels. So this is the range that we are currently seeing right now, because the hard tightening of the ECB will be somewhat set off by the Fed tightening, as well as the yen aggressive accommodative stand that they are going right now. So it will remain between 102.25 to 101 levels. Now, where the Indian rupee is concerned, I think Indian rupee will be again on the sideways, because RBI has been very active into the rupee forwards. They are doing sell buy swap into the dollars in the overall 12 months contracts. So the premium on the forward contracts have fallen quite a bit, at least 50 to 60 paise ka premium has fallen on the forward contracts. So this is what picture we can draw about that is the RBI wants the rupee rates not to depreciate aggressively. So it is maintaining a stand of 78 into the future. So that what we are even seeing. I think the rupee will stay within the levels of 78.25 to 77 levels. So this is what a wider range will be, and one could definitely go for short on the higher band of this range, whereas go for a buy in the lower band of the range. So this is what the outlooks of the Indian rupee consist of. Thank you for watching.